It's in the news that RBI has cut on the CRR rate. And basically, we all are interested in knowing how this cash reserve ratio or CRR, the rate cut, is going to affect us as well as the Indian economy. CRR rates are very important in channelizing the economy in a particular direction. So, how is the CRR rate cut going to impact the Indian economy? This is what we are going to see in this particular video. And not just the economy, but as a person, as an individual, how the CRR is going to impact you in your day to day life. This is also what we are going to see in this specific discussion. So, in today's video of Commerce Gyan, let's understand in detail the CRR. And just in case you haven't joined the journey of Commerce Gyan, do subscribe to this channel and get updates by clicking on the notification icon so that ahead also you can get important updates and news relating to Indian economy or overall uh, commerce and other such things. Before we even understand what the CRR has to do, we need to understand some specific points about the current state of the Indian economy to let us know why the CRR rate cut or the increase of the CRR in any way affects the economy. So, where is the Indian economy currently? What state is in it? If you look at the overall state of the Indian economy, it is not really good. It doesn't look like it's doing fine, because if you see, Indian economy has slumped to 7 quarter low of 5.4% against the estimated 7% that was made by the government and specifically the finance minister Nirmala Sitharaman. So it's gone down. Corporate earnings are getting impacted because of this in a number of ways. At the same time, you will find that overall the situation in the Indian economy is such that there are lowering of wages, salaries, and at the same time, people are losing on their jobs. So basically, employment rates are also low in the current time periods. At the same time, though we find that the wages and the employment rates are low, we find that the inflation rate is on a rise. That means the cost of the goods, the amount, the purchasing power of your money is reducing. You have to pay more for the same goods. Obviously, the main impact of this particular state of being is felt by the middle class because they are being squeezed. The upper class does not have to worry much about the inflationary pressures. At the same time, the lower class has a number of subsidies, benefits, schemes that the government is running. So they also are in a beneficial position. The main issue that is happening is with the middle class. On this, they are facing the both the things, both the problems, that is the inflation is rising and at the same time you find that their earnings are reducing. There is obvious effect is felt of this inflation, and the wage reduction is felt on the consumption of goods. So obviously what people start doing is they start consuming less amount of goods. So when they consume low, what happens to the economy? The obvious impact is that the economy also feels the setback because there's a huge middle class in India, and this huge middle class face is not buying. So when they don't buy, the demand reduces. When the demand reduces, automatically the supply, which is in a large quantity, will face the impact. Or you find that the manufacturing slowdown also takes place. So this is exactly what is the situation of the Indian economy, and the government is now in a desperate position to revive it. So, if you see on 6th December, RBI has announced, the previous governor, now governor has changed today's, but we find that the previous governor, Mr. Shaktikanta Das, had announced that the GDP growth rate estimates are now projected to be 6.6% in the financial year 25 instead of the earlier, the committed part of 7.2%. So they are saying it's a lower projection now. The next thing they say that retail inflation forecast, it was raised. Okay, so the inflationary pressures were increased to 4.8% instead of 4.5%. So they say that you will find that the amount of GDP is reducing, and at the same time you will find that the inflationary pressures are going to increase. They also mentioned that the repo rate, the rate at which RBI lends to banks, that is the lending rate of RBI to other banks, is unchanged at the rate of 6.5%. See, repo rate or reverse repo rate is also having impact on the economy, but this is not what we are going to discuss today. But remember, this is also an important parameter by which the RBI controls the economy. So repo rate and reverse repo rate also impact the economy. But this time it is unchanged, so we are not discussing on this. No, what has changed is the CRR. The cash reserve ratio CRR has been reduced from 4.5% to 4%. So there is a reduction of 50 basis points, right? So this is where now our area of discussion is how this particular reduction of 0.5% is going to impact the overall economy of India. So first, before that, we need to understand what is this cash reserve ratio, isn't it? So unless and until we know what the cash reserve ratio is, how are we going to understand the impact? So first thing, let us understand the CRR. Now, what is CRR? Basically, this can be demonstrated. Here is a person who has deposited 1 lakh in a bank. So it's like a fixed deposit, let's say. And this bank has now having a formality to be fulfilled, that is, it has a cash reserve ratio to be kept, which is 4.5% out of that entire deposit. This has to be kept with the RBI. So if a person deposits 1 lakh in the bank, any bank, let's say any commercial bank, this bank has to deposit 4,500 of this amount with the RBI. Now, why is this done? This is because the RBI wants to safeguard the funds of people. If tomorrow there is a problem, the bank does not face a cash crisis. So that's the reason a part of that deposit is always held with RBI in some securities for the safeguard of the deposits. Now, what happens if you keep this CRR? If you see this bank balance or the balance with the bank which had got the deposit will now be 1 lakh minus this 4.5% of 1 lakh, which means in hand for the purpose of giving away loans or giving away any amounts, the bank has 95,500 liquidity. Correct. So with 4.5%, that is the CRR, they will have 95,500 for the purpose of utilization, and remainder 4,500 is going to lie with the RBI. Now, what if this rate becomes 4%? Same example we take, the person deposits 1 lakh in the bank. Bank will keep 4% of it with the RBI as cash reserve ratio. So balance with that particular bank will now be how much? 1 lakh minus 4% of 1 lakh, which means 96,000. So basically, with the reduction in this particular CRR, cash reserve ratio, the banks will have more money in hand. Now, where does this money go from the bank? The bank will use this money to give more loans. So, if you see with the reduction in the CRR, what happens? The first impact of this will be they will have more money in hand. Second, because of this money, extra money in hand, what they can do is now lend. They will give more loans. Then third thing that we can see as the impact is with this increased lending or loans, what happens is they will be in a better position. People can be in a better position to buy things. It could be houses, cars, they can do more business because they get business loans, they can buy machineries, they can buy equipments with which they can do business. So lending can give you a higher and better purchasing power, and at the same time, this is where now the economic boost can happen. So if you have more money in the economy, obvious impact will be purchasing power will increase. So you have more money, you buy more, and obviously the economic slowdown which has happened because of less purchases will be revived. This is what is the idea behind the reduction of a CRR. Now you will say that, okay, it's just 0.5% reduction in the CRR. How is this going to impact the entire economy of India? Look at this particular point now. Currently, the RBI, with a reduction of this 0.5% of the CRR, has freed up, has liquidated nearly 1.16 lakh crore of cash in the banking system. So this is the excess money that is going to be available now with the banks for the purpose of lending. So this much amount will be available as an increase in the purchasing power with people. So 1.16 lakh crore rupees is going to be available. And with this purchasing power, people will buy more, manufacturing may increase, business may increase, and in all the economic revival may take place. This is what is the idea. So this is the whole idea behind the RBI's decision behind the reduction in CRR. So those people who are learning economics, who want to understand CRR, this is a very important case study that has come up in this particular time period of December 2024, where you find that the CRR has reduced, the valuable resources that are available with the bank for the purpose of lending are now freed up. And with this amount being free in the economy may be revived. So the possibility increases that the economy may be revived. Correct? So with this, hopefully you've understood the meaning of CRR and at the same time how it impacts the economy. So for more such valuable updates and information about economics, law, commerce, you can join the journey of Commerce Gyan India. Hope to see you in the next video. Thank you.